Hello, good evening traders. It's Mark here from the Day Trading Room. It's 7 on a Sunday evening, London time, Sunday the 20th of February 2011. Long weekend for my fellow traders across the pond. President's Day tomorrow, so happy President's Day for that. Any of guys in the US looking at this video? Yeah, got to run through the trades from Thursday and Friday. I think I put up a video on Wednesday. So I've got Thursday and Friday's trades to run through. And what I'm going to do is I'm going to run through the best and the worst. There's a few little scalps. I will point them out. Every trade I do is documented on here, but I won't go into too much detail about the specific setup for some of them because there's such a lot of action going on in oil at the moment. We'll be here for hours running through it. So I'm just going to go through the most important ones, I think, the best and the worst. Not always the best in terms of profit. Sometimes you have a great trade setup, doesn't yield as much as you'd like. Similarly, you really take a really bad trade and it happens to be profitable. That's sometimes how trading is. It's about doing the right thing at the right time, time after time, again and again, repeating the same process, and you get on the end of some great trades. So let's start off with oil. Oil's been fantastic. The range. What is it on Friday? It was. I mean, it's a monster day on Friday. Really interesting day. We had a 230 odd cent range on Friday. The Dow was in a, it was in a 60 cent range before the last 30 minutes or so. It's basically doing twice to three times the range of the Dow at the moment. So I'm really pleased that I've added that to my arsenal of markets. As I said at the beginning of the year, and I changed my plans slightly from last year to focus on another few markets. I had planned on doing the DAX. I'm no longer doing that. I find there's enough opportunities in oil. Oil was my primary addition to the YM and the ES. I was going to look at the DAX also and the Euro. I've still got the Euro up. I don't look at the DAX at all. I think it's too much time taken out of my day to do that. There's plenty of opportunities in the oil. So oil and Dow are the primary markets for me at the moment. Have traded a little bit of Apple the other day on the news. Didn't document that, but that was literally just the same sort of setup. Anything big like that, that's the news coming out, happy to trade that. And if the markets that we're watching are dead, oil and Dow are dead, but oil is far from dead. Anyway, let's down to the trades. Thursday. This is the March expiry I'm showing you now. You've got to be careful on the expiry when you're moving over to the April, because the levels that you're used to in your head and you got used to them have changed completely. So something to be aware of. Anyway, this was March. This was Thursday. We've just been struggling to get over to 85.10 level, pushing higher. I'll zoom out on that a bit. We can see a bit clearer what's going on. Yeah, you can see. Look how many times we poked above it and then pushed down. So that was really the premise on the open, looking for the short. I mean, we popped above it there, popped above it there, popped above it here. Wasn't completely convinced with the whole thing, but took a little short anyway as we popped up and immediately came down. Took half off there, and then I've sat with this. I'm sitting with this thing for a good 30-35 minutes. It popped up higher again. I didn't like it and ended up taking out just above break even. So only a profit on half of the trade on that. But really odd action. But then you get that sort of thing when you're looking at expiry. Then we pushed up, and we pushed on here. I wasn't involved in any of this. I wasn't sure whether we were just going to do a fake and back down, a flush and go, whether we were going to start driving on. So when I'm not sure, I stay out. I don't get involved. I just take a step back and let the market give me a little bit more conviction. In the day, every time you place a trade, you're putting your hard-earned money on the table. There's no point in risking if you're not sure. We never know what's going to happen, obviously, but I like a bit more of an edge. This was my 4 second trade. It just turned out to be like that. Sometimes you get them. Literally, it's my setup that I like. I've spoken about it before. Bread and butter stuff. Wasn't convinced what the situation was. Then when I saw this good drive up, I'm looking for the first pullback. Got this first pullback. Bought a batch at 85.87 and bought another batch at 85.86. Oh, sorry, 85.86 then 85.87. That's all I could get. and it just popped straight away. Literally, as I bought it, it popped. But in a way, your actual buying helps the popping process, if you like. Okay, even if you're trading, you don't have to be trading a lot of size, but taking that offer and people seeing that in the tape, combine all those people helps to push it on. So let's say got along 85, 86, 85, 87. 4 seconds later, covered at 86.01. 7 seconds later, covered the rest of it 86.06. So 20-point trade and 13, 14-point trade. I would have held for longer, but when you get that amount of profit in less than 10 seconds, I'm taking it every day of the week. The less time I can be in, okay, perhaps I should have kept one on the table, because we did then pull back and have the longer, really nice drive, the 60-cent move. But if you can get to that sort of profit in less than 10 seconds, when I see that, poof, I'm out into the flush. Because don't forget, I'm also looking this 86 level. All I really was looking for was that one more push over the 86, the key level, the psychological level, the whole number that everybody looks at. We had the push in volume. Obviously, part of that was some of that was me, only a little bit, but some of it was me. Got their push up and I closed into that. So that was a great little trade. As I say, this less than 10-second trade. I doubt I'll get one of those again for another month or so. Then I'm looking for some sort of flush higher to get short, and we happen to get it here. This was the move I was waiting for. As you can see, my entry was 86.36. Not sure why I put that on for some reason. Obviously, some sort of notes from Thursday that I had to record that there. But yeah, we popped through that 86.40 high, and as soon as I see it coming back down, my risk is quantified. I've talked about this before. There's your high, push straight back down. That's an awful drawing, excuse me, let me redraw that. No one's going to make any sense of that. I'll tell you what, we'll leave us on here. There's your high, there's the tail, if you like, the wick. As soon as I see that wick, I can take my short. I actually got 36, which was probably around here on the entry. The high was there. My risk is a few cents above that. I'm not going to go right on it, because as I've said before, if I'm taking the flush, I don't want it to revisit. This case I ended up taking it all out. Then why did I take it all out? Because we hadn't tagged this moving average yet. So I'm still a little bit cautious. I'd rather take this for a full reversal much further on in the trend. We've only had one small pullback here, which I got on, little tiny deep, slightly deeper pullback there, and here's the fully deeper cycle pullback. But I took it all out because I just wasn't 100% sure we weren't going to pop one more time and go lower. But in the day, 28 came out, 23 all out there, and it worked out okay. We did revisit. I didn't take the short again, but a nice scalp nevertheless. And because I took the short there, I didn't take the long there. I think if I hadn't have taken the short and I'd seen this support here, you can see a lot of support, short-term support building as the moving average pushes up. I'm not a massive fan of these moving averages, but I'll pay attention to them because there's something interesting. There's some interesting. You can gauge the market not reasonably from them. The same with indicators in general. I like to put indicators on based on what I'm already seeing, rather than going through indicators and trying to find a pattern. Like the cycles, I like to look for. Use the stochastics. Anyway, I've spoken about them before. I don't need to go over it. Yeah, so that was that trade there. So we got that nice little 7-second trade there, the nice pullback there. Then I went for the deeper cycle. This was a little bit interesting because we just popped. My entry was at the right at the top of this candle, and I took a little bit of heat on it. But as I've mentioned this before, when to use larger stops and when to look to scale, and I only got a small position on here because I was looking at the counter trend. Let me get the correct thing on 3 minutes so we can see the actual shape of the market trade. But it was, it was nice. It was nice, a nice setup. But unfortunately, I only got a few on, and I didn't hold for as long as I could. But hey, good trade nevertheless. Pulled back to this 86 level. I just bought as we dipped under. It was probably around here. As we dipped under, it looked great. We got an first oversold condition on the stochastics, so I'm looking for that push trend and the cycle, and that's the premise really. The deeper cycle pushback. Difficult to get an accurate entry, but I thought this little pop lower was okay. I thought it was almost like a little flush lower. It was going to pop immediately higher, so I bought there. I've got a reasonably wide stop. I'm looking at the range, the average range of the bars, thinking I've got to give it a little bit of room on this. You can't be too tight, as I've said before, because you are trying to catch that move rather than this sort of thing, which is a case of, the point is this could still go lower and still be a good trade. This cannot go higher and still be valid. The premise of this trade, this cycle trade, is I'm looking to catch the longer term cycle for a revisit of the high. I'm thinking there's still some buyers in the market. That's the premise of the trade. The premise of the flush trade is it's a panic and it shouldn't revisit. So that's why you can give it a little bit more room, these sort of trades, but obviously within your risk parameters. I always throw up this 50%, 25, 75. It's not a fib as such, it's just I've adjusted it to suit. And I will take a 50% retracement, and we're still relatively it's relatively okay still. It hasn't gone below the 75, so I'm still happy with it. Anyway, push back up, took a first scale there just above the 86, and then I took another scale here. It was in the high teens, so yeah, okay trade, pretty standard stuff really. Let's move on to Friday. What a day on Friday. Really interesting day for traders. Let me just change the expiry. We're on the April expiry now on Friday, which is why the price is different. But let's have a chat what's going on. Yep, standard setup for me. Good push higher. This looked strong at the beginning. I have to say at the open it looked strong. I was looking for longs. That's all I was looking for, and I just felt there was some strength there. Whether it was to do with expiry, people getting in, I don't know. Anyway, got the drive higher, didn't get involved in any of this, looking for the first pullback, got the first pullback to the 90. Don't forget the expiry now, so the prices are different, but it's the same rules apply. Whole numbers, I'm looking to see how the market reacts to those whole numbers. Got the push high, got the pullback, I'm buyer just above 90, popped higher, managed to take a nice half the trade off in the high just before the 20 level. Great little 15 to 18 cent trade. I've got my notes with me. I think I filed away last week, so I haven't got the exact fill on that. But anyway, I held half looking for a revisit, so I'm still in here with this. I'm a little bit nervous, and I have to say it was close to me ditching this, but I thought, okay, it's still a valid trade. You've got the first pullback, you've reduced your risk, so you can either say that your entry's down here for break even still, or however you want to put it in your head when you take off half, whether you want to refocus your entry or whether you want to say that's in the bank, however it works for you. So it's still valid. So I'm still happy about this, and I want to see how it reacts under the 90. This is key now. 90 is key for me. How does it react under the 90? Well, we stayed under there for not long before we popped back up, and a little bit of a tape buyer. I just got back in there, just we poked above the 90. This time I took it all out at that last level, which was the level I took it off before, and actually it paused a bit before popping, so I missed a little bit there, but still happy because I added to the trade and got a lot more out of it. And actually the premise of it testing the high worked, but in theory it took a while. This little arrows here, just a scalp trade, won't go through that. Take read, I say, had a long premise, looking for buys, so little scalp on there, and again little scalp on here. We'd struggled at this level here, 35 level, several times, pushed down, but I just saw the buyer stepping up again. Take reading thing, and actually they worked out really nicely. Nice 20 cent trade. Premise was to pop through that level high, and I'm just scaling out to there, and you can see how many guys have got stops there because of the volume. I'm just scaling out to the stops. So that worked out very nicely, using them as some leverage. Moving on, a stop out for me on this trade. Stop out for me. The good push, I'm looking for the counter trend move. This looked absolutely textbook really, but you get stopped out on even the best setups. Here it is on the 3-minute, the good drive, the pullback. This is my little 5 p.m. London time window that I look for change in direction, and here we got it. We started to get a nice pull down. I bought 5 o'clock on the dot London time, thinking great, nice oversold stochastics, nice push down, little bit of volume there, pulling out a few weak longs. Let's have a revisit. Let's see if we can get 91 out of this, see if we can get a 40-50 cent trade. It took ages here. This is the warning sign for me. It took such a long time that I just, if it starts to push up here and then pulls back down, I'm not too concerned. I'll probably scale a bit out, but I didn't even get a chance to get a scale on this, and it rolled over, and I ended up coming out in this candle here, so taking a stop on this trade because the volume was big. We had loitered around here, there was no buyers, so you're just all out there on that push lower. Never mind, happens, not too concerned about it. But it looked great, it looked great. 5 o'clock window oversold, looked great for a push up, maybe test the 91, and I was looking for strength. Didn't get it, got stopped out. Doesn't matter. Here again, let's talk through this. We're 15 minutes. I might do it. So I'm going to last for another 5 minutes here because this is something I do want to document. We'd rolled over here. I've still actually got a long bias. Incidentally, the little pop off the VWAP was worth a good 40 cents or so, 35 cents. Didn't take it. Was still a little bit unsure. Didn't want to end up buying again, especially just been stopped out there. Wanted to see the market tip its hand a bit. Still looking for buys, but actually I was quite looking to buy under the 90 because the 90 was such a key level. I thought, okay, let's see if we can get a flush under 90. We might get a pop back up. So I ended up buying this. What was it? 67 and 65. If I remember, not far off that. I ended up buying. Actually, let me pause this a second, then I'll just get my actual fill on this. Hang on. Okay. Yep, my fill was 67. I actually bought this at 67. Okay. Now, because I was looking for that flush lower, I thought this was it. I thought this was a flush. We're going to get a pull back. I thought this is a great entry. There's a good 40 cents in this. But do you know what? I bought that at 67, and I quickly noticed that this was the wrong trade. The tape revealed it to me. This is why tape reading is such a powerful thing. I could just see a seller sitting there. He was just sitting there. He wasn't lifting. There's a little bit of buying interest, but he wasn't lifting, and he was coming on with some size. He was stepping down a cent or two, and you know what? I thought that I just want out of this. Let's reframe this trade. This has pushed lower. This has caught a lot of people out. This really is the first little pullback before the further push lower. So I closed that straight away, hit the market, and I got out at 65. So I took a 2 cent loss on that. And then I hit it short at 58, a lot lower than the 65. It would have been nice to have got in at 67, but it dawned on me that this was weak. So first thing to do, get out, protect my risk, get out, bang, take a 2 cent loss. But then I thought, you know what, this is a great setup. This has spooked a lot of people, and there's a lot of people like me who perhaps are buying at 90, especially people because it did loiter around there for a few minutes. There's a few buyers came in here, so this is sort of max pain level, 60 cent. If this goes any more, I can see people running for the door. So yep, took the short at 58. Bang, we got that lovely flush lower and just scaled out into it. Didn't get as great as I'd liked, if I'm honest. 28 was my last exit. I was out at 38, 48 in the the eights, just taking the 10 cent increments. Yeah, okay, I didn't have a great trade as I liked on that, but actually more pleased. I think the best trade for me of the day was recognizing that I was wrong there and just clearing out, not trying to make a good thing out of it, just seeing, hang on, this is bad. And really, even if that tape said have lifted and we pushed up, I could still have bought anywhere around here and there still would have been some meat in the trade up to the 90. So it wasn't imperative that I got the 67 on the low. So that I really sort of mark it down as the best trade. It's a 2 cent loser, but in terms of keeping me out of trouble and reversing, great little trade. Then I took it again short here because we just pushed down, pushed back up, held. I just thought, if that 89 cracks, then that's going to be a great little trade. And pushed down, great little trade. Hitting the market as that 89 breaks, I'm hitting the market, and I got a fantastic fill at 83. Only a small chunk of the position because I thought we may go lower, and then I took the rest out at 94. But that happened to be as we'd pushed back up, because it went to the 80. I think it was 80 on the low, so it would be really great exit for me. But literally, all I'm doing is market order on the flush, on the stops, bang. I'm looking to scale out into that force, if you like. So yeah, 83. Then I saw the strength coming in, and I took it all out at 94. And being even more slick, which is why this was such a great day for me, it was hovering around. Tried to revisit on this candle here. What was the low on that? 82. Then it pushed back up. I took a long at 90, and I scaled out just above the 89. It was 89.04. It was so okay. Nothing great in the scheme of the bounce we got, but we're coming towards the last hour. I'd had a great little run, only one stop out for me really. This didn't count. I was pretty pleased I got away with that and made some money on that, and the push lower and the push higher. And now I'm thinking, okay, let's not be cheeky about this. You're starting to you're starting to get a bit cocky. I started to feel a bit cocky because I got away with it there, made money on that, and now I'm on the reversal. I'm thinking just be careful here. End of the day, end of the week. So yeah, took it out 04, and actually I was looking for a little push higher above the 20, rolled over, and then up taking it out in the teens. I think it was like 13 or 14. So still a 20 something point trade, and also was it 30? 04. So it was a 14 point trade. Really pleased with that. Sat on my hands for all this. I was looking for a short at some point, and it actually worked out quite nice because we popped to the VWAP, and overbought stochastics right to the 90 cent, popped over. This would have been a gem, but I just called it a day. It had been a great day. I really thought I was pushing my luck with all this with stuff in, but sometimes if you're in tune with the market, and they're just setups that I would like to take, but they happen to all come at once. Push lower, first pullback, great. Second pullback, great. Flush with an 89, great. Covered the short. Thought, why not go long here? We've moved a really good move at the moment. We've flushed out all the longs that are in it. They've all been stopped already. If they weren't stopped there, they were stopped under the 89. Any buyers? Yep, I see some buyers. Why not go long at 90? My stop can be below the 80. It's not a lot of risk. If it happens to be a complete flush out and a complete capitulation, what have I risked? I've risked 15 cents. It ain't going to kill me. It's worth a go. And it popped back up, and it turned out to be a nice trade. So good trades on oil. I've got time to go through stuff on the down the YM. Probably not. Nothing exciting, guys, to be honest with you. I took a little short on Friday as we pushed up looking for a dip down into the 5 o'clock. I'll bring the screen in, but I'm not going to spend time on this because it's not exciting. No, actually, it's on the ES, the short. Where are we? Yeah, there we go. I took that little short there just because it popped up, failed to pop, and I'm looking for the pullback into the 5 o'clock hour. I got a point out of it. A point, nothing exciting at all. The YM, where are we? I did some stuff on Thursday on this. After the data, we pushed higher, failed to push lower, took a long, took it out into this high here, scaled, then took another buy, thinking, okay, I can afford to have a stop under the low because the range is so low. And to be honest, I got bored of it. It pushed up. I took it out just below the 60, but in reality, it's like a 10 point trade, which I'm happy with it, and okay, the risk is there. It's a little bit slower, but you just have to leave it to mature, and I didn't think there'd be any more out of it, but it ended up pushing higher. But anyway, I feel more in tune. There's more opportunity, should I say, on the oil at the moment. So those are the trades. All good stuff apart from this, but I would still take that one again. Yeah, this is a lot of scalpy stuff around here based on the open. This was an awful trade, awful entry, but a great exit. I realised I was wrong, and I reversed, made the money on that. Didn't get caught. Could have been a lot different. Good stuff. Don't forget we're on the April expiry now. What was I going to say? That was it really. Great week. I hope you guys had a great week as well. Market, the S and the YM just seem to be plodding on. So we're just looking for opportunities there, and also opportunities in the oil. Some great volatility on the oil. Important to keep the stops there. Don't mind taking a stop because the opportunities are there for us to get that back and end the day nicely in the green. Good trading, guys. Have a great long weekend. Well, it's near the end of the weekend, but have a great day off tomorrow, and we're back in the middle of the next week with another video.